Environmental Trading Edge LLC and its members are not broker-dealers or financial advisors. All these webinars are for educational purposes only. All of our indicators and such are for personal use, non-commercial use, and are not to be construed as a solicitation of any products to buy or sell. They are not recommendations, and always talk to a financial advisor for any kind of financial advice. Past performance is not indicative of future results. You can always pause the video if you're looking at the recording right here, or review it on your own time. Today we had a question kind of pop up about these bank failures that are happening today and stuff like that. So I'm going to crush that out just really quick and just kind of generally talk about it and how it relates to Adapt Advanced. And then we're going to go through what happened in the trade today. You know, spoiler alert, we took off a max gain and we haven't entered a new one yet. So we'll deal with that tomorrow, but we'll get into that a little bit later. So as far as, you know, banks collapsing, what happened? So the general question was, hey, how is it that an over $200 billion bank goes bankrupt, right? Goes belly up. How has that happened? And then, of course, in the middle of that question, we then had Signature Bank blow up, which is, I think, another 120 billion or something like that. So, yeah, historic things like that. What I want to say first is that these things happen in certain market cycles, right? Right now, as you guys, any one of you guys that are part of the Sleep Well or Awake, you guys already know we're in the collapse stage of the recession. Like, this is when you have banks collapse, right? You have things collapse, right? That's why I call it the collapse stage. So it's the third stage. There's 4 total in a recession. So there's demand destruction, or there's deleveraging, demand destruction, collapse, stimulus, right? And right now we've had deleveraging already. That was first stage. Second stage was demand destruction. That was hiking of interest rates, trying to get the consumer to buy less, things like that. Normally you start to see inflation slowing during that time period. And then you start to see inflation really starting to dive during the collapse stage. That's kind of when everything drops. And inflationary recessions are different than deflationary recessions. And right now we are not deflationary. So the Fed's got themselves into a little bit of a pickle. So bringing this like full circle right here, we sat there and set up that process, which we'll talk about the trade plan in just a second, not knowing what was going to be the cause of anything. And if there was something that I'd want to just really push hard right now, is the why is completely irrelevant. The what is going on is just kind of irrelevant as far as the trading system is concerned, because the whys and the whats have already been built into the metric. There's a reason that we have a heavy bearish indicator on the metric. There's a reason why we mean reverted a rally and then we trend followed with negative delta to the downside on the break to the downside, right? That was part of the process. The what happened that caused it didn't matter, because each cycle will have different reasons, whether it's Lehman popping or something like that, right? Now, kind of bringing it to the actually answer the question, which is what's happening is the Fed is pulling liquidity out of the financial system, right? When they are letting assets drop off their balance sheet, it's destroying dollars because we're in a debt system. So anything that the Federal Reserve bought originally that they're no longer going to continue buying reduces the amount of dollars in circulation. Then you're raising interest rates, which decreases the amount of dollars in circulation. This squeezes banks. Banks are not able to keep their liquidity up, because what ends up happening is the amount of dollars flood out, right? They start drying up, but yet there's more collateral in the system, because like everything that the Fed originally didn't have is now being pushed out into the financial system, and the banks are forced to buy it. Keeping reserve requirements, things like that. And then what ends up happening is during times of low yield, which is what we had prior, these banks needed to park all of this liquidity somewhere when we were flooding them with dollars. So they parked them in longer dated assets to try to get yield. And then now that those longer dated assets, basically their book value right now blew up, right? That creates a loss on their balance sheet, which means that they actually can't sell off those assets. Otherwise, they'll realize those loss. But yet at the same time, if people are withdrawing money, which is what was happening, people were withdrawing money out of SV Bank and Signature due to whatever reasons, right? Due to most likely because their assets were falling. And so they needed to shore up cash to move their assets out of crypto and things like that. But anyways, I digress. That ends up creating basically a run on the bank where there's now not enough cash at the bank, at that specific bank. And they've got all this collateral that they purchased, right, with cash that they used to have, right? And they only needed to keep 10% of their cash, right, because that's the reserve requirement. So basically 90% of all the cash in the bank was in these assets. Well, now people want their liquidity, right? They want their cash back. And they're like, well, we can't sell these because we're upside down. And so all of a sudden, you get those reserve requirements, you get the cash that's drawn down. And then all of a sudden it's like, we can't give you any more cash because we're at the federal minimum and we can't sell these assets for any more. And this is basically a perpetual motion machine of taking on losses, and the bank can't stay solvent. And so the federal government comes in and seizes them. And for right now, they're providing liquidity to these banks. So these are the first two banks that are happening. This is what happens in the collapse stage, but the Fed's bailing them out right now. That is a purchase, or that is a printing of new money that was originally kept, in the background. It's inflationary on the dollar. It's inflationary for assets as well. So it's actually kind of a bullish thing underneath all of this, but it can create crashes, because of the instability. So there's a lot of pieces moving around.